Good morning, everybody. Welcome to the Flow Show. A shortened week for us in the US and the UK after the bank holiday yesterday. No complaints about that whatsoever. But we've got plenty of moves to get stuck into over the last few days. Lots of stuff been happening. We'll talk about shortly. Morning, Kay. You have a good weekend, mate?
Morning, Ryan. Yes, very good. Family was over, so yeah, it was a really good weekend. I hope you too. And good morning, everybody. Let's get stuck in.
Yep, absolutely. I spent a lot of time in the garden over the weekend, so don't know if that's good news or bad news. A lot of hard work, but anyway, good to have a couple of days off work. Anyway, right, let's get stuck into it. Going to kick off with just last few days now of our sale. Well, I keep saying it's the last few days, but at some point they'll pull the plug and I'll open it up, but it won't be there. But our sale 40% off our platform for a monthly subscription if you want to take advantage of that. And don't forget the summer sale we've got on our trader funding program too. That's happening at the moment. You can get between 15 and 25% off if you use summer 15 and summer 25 as the codes for that on our TFP site. So don't miss out on that one either. And I'll just put the linky dink in the chat room for you. If I can find it, there we go. Let's just put that in the Zoom chat. Anyone want to check out the trader funding program? Summer 15 and summer 25 are the codes you need to use for that one. Right, so let's get stuck into what's been going on. Start off with a bit of data. We had PPI data, or Corporate Services Price Index, as I like to call it over there in Japan, coming in at 3.1%, beating expectations, slightly lower than last month, although that was revised higher. We've got some Chinese industrial profits as well, coming in a bit stronger at 1.4% year to date. Going back to Japan, a few things going on. Ueda was out saying that Japan is still struggling to reach 2% inflation target sustainably, although progress has been made. He said they're closer than at any time during the last few decades to get into target, but not quite there yet. So not giving any real hints about the next BOJ meeting, still playing both sides of the coin for that one. Some big news out this morning, well, partial news in amongst everything else we've had, is that there's been reports that the Japan's Ministry of Finance is going to consider tinkering with its bond buying program for fiscal year 2025. Mainly what it's going to be issuing, changing your durations. They are going to consider trimming the issuance of super long bonds. So that's your 20s, 30s, 40s, and so on. This has caused a big drop in Japanese yields today, which has seen, as you can see there, the yen weakening quite significantly, doing the opposite of what it was doing when all these yields were shooting higher. As you can see there, quite a big move down in yields off those highs. Now, the decision is likely to be made in June, according to these sources. There will be no change to the total size of the debt issuance that they're doing for that fiscal year. And this has all come about after the Finance Ministry sent a questionnaire, one of the biggest questionnaires apparently they sent to market players regarding what would be appropriate issuance amounts for government bonds. So we're all looking and waiting to see how they would or might react to these rising yields. They'd already brushed aside the fact that they would look to intervene, saying there's no financial stability risks seen at the moment, but just changing the duration, meaning if they're going to issue less long-term bonds, they're effectively reducing supply, and they'll put that supply into the shorter end, which hasn't been rallying as much. So less than the supply, more people want to buy, so therefore you force the price higher and yield lower. So that's what we're seeing at the moment. The question is, and this is what I'm going to ask Kay, is this just a bit of temporary relief? It's still just a rumour, or is this going to be the turning point for what we've been seeing, and we'll see yields maybe finding a sort of comfortable place to sit around for the next news? What are your thoughts on that, Kay?
This looks like a bit of speculators moving out straight away, looking at the immediate reaction and the second leg of the reaction after that. So it may be enough, because if you look at the Bank of Japan, and we've been talking about it so often, they're not going to rush their interest rates in the monetary policy up to 1.5% straight away, or let alone above there. So somewhere it's a bit of a logic reaction, but it is quite a move coming from the government stance, because we were talking about what can the Bank of Japan do, what can MOF, which is obviously the governmental side of things, but what can they do? And now the government actually took the decision to say like, okay, MOF, we are going to issue less longer end bonds. It is in line with what is already happening elsewhere, especially the US, as we know, in their from their quarterly reports and refinancing agreements. They have already done much more short term than the long end to finance their debt. So there is kind of a realignment there. We are seeing it also happening or being touted in the UK. So yeah, there is a bit of logic there, but um, according to what we heard last week, they were relatively swift to react to it in timeline wise. Maybe not the levels that we saw, because it was accelerating, but timeline wise, this is a relatively prompt reaction by the Japanese government. So it could be enough, at least for now. I'm in doubt, well, unless they don't issue any more super long bonds. But I'm in doubt we can go much lower. We are for sure not going to see levels back. That's while you are on the 30-year there. I don't think that levels below 250, 260 would be warranted right now. But now the next step is to wait what the Japanese whales are going to do, because if they were waiting clearly to know what the Japanese government or the BOJ were going to do as a reaction to what we have seen in those long-term bonds. But now that they had the reaction, perhaps, just perhaps, they will be tempted to, on any blip, give or take 3% in the 30-year to start to invest again more into those bonds. So there may be some success in what the government just did right now.
Yeah, I think we'll have to wait and see, though. We'll see if it
Yes,
lasts.
because the Japanese whales are typically not overnight movers, right? They
Yeah,
have their plans, they have their investment plans, which are revised usually twice a year. So since the Japanese fiscal year starts in April, the revision is usually expected for September, and to get ready for October. And then that's where we will probably hear more and get more clarity about those Japanese whales.
yeah, absolutely. We've also got some news on the trade front. Again, this is just all sources reporting, saying that Japan is looking to potentially try and reach a US tariff deal by the G7 meeting in June. So they're continuing to work hard. Trump has seemingly softened up on the Nippon Steel involvement in US steel. Let's call it involvement rather than a takeover. There's going to be investment, although it seems the details are a bit light as to whether Nippon Steel were going to be taking over US Steel or investing or whatever. But there's a chink of light coming in that part anyway. A bit of data this morning as well out of Europe. We've had the first May readings and CPI out of France, and softer numbers all round. CPI coming in at 0.7%, was expected to go up from the 0.8% previously, so it came in lower than last month. HICP, the Eurozone measure, also coming in 3 points lower. This inflation has been trucking down quite fast. Our mate at the ECB, Victory Villeroy, says French inflation is a very encouraging sign. Says interest rate normalisation may not be over. The problem he's got is that we're well under 2% in terms of measuring it in complete Eurozone measures or ECB measures. And as you can see, we've had a real big trend down. We're coming down to levels where low inflation was a problem. And this is still a bit of a risk for the Eurozone. Obviously, not all countries are the same, but France is in a position where it's got anemic growth, and now it's got really weak inflation, which Villeroy might be loving at the moment, but he won't be loving it if it keeps going down, which it can possibly do, because if your activity is very weak, people tend to cut prices, which doesn't help inflation whatsoever. So there is still a risk that the Eurozone countries can see their inflation rates falling further than what the ECB would like, which means they would potentially have to take rates lower than they would like. So it's a risk I've been banging on pretty much all year, and it's still there floating around in the background somewhere. But for now, inflation coming down. We'll see what the rest of the Eurozone members do. ECB's Simkus is worried about that I've just explained, saying that the ECB faces a greater risk inflation will undershoot 2%. So that would be a reason why they'd want to continue cutting. Going back to the data from last week, just one point, one item I've just picked out. It was from last week, which was the home sales data in the US. Strong numbers, new home sales up 743,000, beating the expectations. And one item I'll keep an eye on is the old prices. They were down 2% from April 2024 and down 7.5% from March's prices. So we're seeing a little bit of price weakness coming in, but activity overall is still looking pretty healthy. So no cracks appearing there, but maybe some price pressures starting to play out in the housing market. Right, the next relevant trade news and market moving news we had is last week, Trump saying he didn't want to deal with the EU. He's happy to slap this 50% tariff on at the June deadline. Besant was out saying that Trump believes that EU proposals thus far haven't been of good quality, and that Trump will move in response to the EU's pace on tariffs and hopes this will light a fire under the EU. Well, apparently that fire was well and truly lit, because that caused von der Leyen to speak to Trump, and she managed to secure a deadline on 50% tariffs until July the 9th, so they can reach a deal. Says Europe is ready to advance trade talks swiftly and decisively. And then this morning, EU is going to focus apparently on critical sectors in a bid to get around these Trump tariffs. So a bit of relief there for European markets as well on that news, that we've had another can kick, which has pretty much followed the status quo all through this saga, and that they're going to pull their finger out and look to get a trade deal done as soon as possible. So it looks like Trump's threats worked. We've seen a big bounce in European stocks today, and US is probably going to follow suit as well. Kay, what do you make of it? Is this just another can kick, or are we really working towards a deal?
I reckon both sides would want to work towards a deal. The issue that we constantly have is that from the US side, Trump is still unpredictable. He can come out and say because he said a few weeks back or a month back or so that Europe is finally starting to play nicely, and then all of a sudden it does come back with a 50% tariff threat. And from the other side, we know that European countries, they need the revenue from VAT, from different taxes to survive. I mean, to get their budgets to keep their budgets under control. So there are, in my opinion, going to be some sticky points remaining. Now, there has been talks that Europe wants to do something about some of the tariffs. So there is always hope. For as long as they are around the table, there is hope. Um, I've got the impression that Besant was actually a bit surprised about those 50%. Then he needed to reply something to in a press conference or in an interview that he gave, and he just said Europe is not always playing nice, but he didn't give too many details there either. But before we reach an agreement, I do think there may be some sticking points remaining there along the road.
Yeah, absolutely. Expecting many of them to pop up. Back to Besant, he said that several $100 billion a year will come from tariffs. So it's going to be a bit of an income stream. Says we're going to have several large deals announced over the next couple of weeks, and he will be negotiating again in person with China. He's talking about the currency. He said that he wouldn't necessarily categorize these moves as weak dollar moves. Says other countries' currencies are rising, not US dollar falling. Don't know how he comes to that conclusion, but anyway. But he did also say that the sovereign wealth fund is on pause for now. So I think what we've mainly been seeing is a bit of this sort of US risk on again. Tariff threats easing again. We're heading towards deals, which has been the outcome all the way through this, irrespective of all the waves that it's made. So today we're seeing the dollar taking on a bit of strength, or strengthening a little bit. It's in places and not in others, depending on what pair you're going to look at. But we'll look at so euro there just dipping a bit, but we'll look at that in more detail in a moment, because we've had Fed's Goolsbee, never one to miss grabbing a mic. He was talking about the 50% EU tariff, saying that it is in an order of magnitude different from the current situation of tariffs, and saying tariffs that high would be scary for the supply chain. He says in the short run, the Fed needs to wait for the dust to clear. The bar for action is higher until that happens. He says there's a fear that the data is lagging and upcoming reports will show a more serious impact from actions already taken. Says the Fed will factor in the higher long-run market rates, but says financial stability worries so far are overblown. Fed Schmid says nothing good happens when rates hit the zero lower bound. Fed's Kashkari says there is a healthy debate among Fed policymakers on whether to look through the inflationary effects of new tariffs. And says, personally, I find arguments against looking through tariff-induced inflation more compelling. That's it on the headline front that I can pick out of this shortened week. Okay, anything else?
No, I don't think so, unless we want to go on to the geopolitical tour. But no, I've got nothing more to market moving right now.
Good. Okay, we shall move on. What we'll start with is just having a quick butchers at what's coming up this week. We've got the RBNZ coming up early hours of Wednesday morning. Market looking for another cut there, but we'll see how far they want to push the button on that one. Not too much out today. What durable goods, some house price data. Oh, we've got US consumer confidence. I say not a lot, but we've got that coming out. So that's going to be a pretty big one for the data, just to see if we are seeing any further impact from all this uncertainty. Consumer confidence hasn't been doing all that well of late, as you well know. Wednesday, we come over, we've got some final or revised GDP numbers from Europe, but not too much else coming out. FOMC minutes, which is tends not to be anything major, seeing as we hear 1,000 times from every Fed head since the last meeting. On Thursday, get a bit more GDP data from the US. See how the first or second revision, I can't remember, it's all rear view mirror stuff at the moment. But more pending home sales, or more home sales data from the pending home sales there, not a lot else. Friday, bit of data out of Japan, unemployment rate, industrial production, retail sales. We also get retails from Australia and Germany. Then we get Italy's CPI coming out, and a few more bits and bobs, and it's going to be regional numbers from Germany in the morning before we get their main number at 1 p.m. later on. Bit of Canadian data coming out of there. And then, is it PCE Friday?
Mm-hmm.
So that's potentially going to be the biggest one, although Powell's tipped the nod to that one yet again for the 4th month running. 2.2, I think he said, PCE, wasn't it? I can't remember. I'll have to look it up.
Yeah.
But, yeah, that's going to be another boring number potentially. And then we get the old MISH data coming out a little later. So not a massive week in terms of big data events, but then it will kick off next week as we enter non-farm week and ISM and PMIs and all the rest of it. So enjoy the calm while it lasts. Kay, you got any thing on the RBNZ? Anything you're expecting from them?
To a 0.25% cut is expected. Some over there actually are seeing the possibility for them doing 0.5% or a 0.25% with a clear dovish path, which puts the Kiwi, in my opinion, among those currencies who could be in for a positive surprise if the RBNZ does not give them everything that the market would be expecting. So either a dovish 25 or even a 50 BPs cut. So that's the only thing I'm looking at regards to the Kiwi. And when we look at currencies, the one thing we must say now, the overarching theme is still seemingly for a lower dollar, but we have seen this reaction that we had post Japanese government putting those bond yields elsewhere lower, and other bond yields have also reacted in sympathy on the long end, and it did have a clear impact on all dollar pairs. So that is something that we're going to have to keep an eye on this week. And then Mike Delfino came up with the ugly word. It's also end of month week, and I'm straight away going to reply. Maybe could it be that hedge funds and CTAs are front running dollar buying flows? I did not look in detail yet what the performances were over the course of the month, but the 1 week performance of what I expect for most of the equity markets has been a positive one. So who says positive for US indices? Could perhaps also think maybe a bit of dollar selling, but we still have to get tomorrow's value date month-end trading with potential US corporate involvements. They have been relatively quiet the past months. Only last month we saw on value day trading it really lasted only an hour or so into the London fixing what the US corporates had to do. So with all that front running the tariffs, I'm not 100% sure how I should or how we should read this end of month once more. We have seen some messy price action over the course of the past months, which is understandable, because people will probably have dynamically hedged, perhaps not a lot to do anymore month end. So we have to go a little cautious on our month end calls for the time being, I would say, Mike.
Yep, good stuff, mate. We always seem to get it's looking a bit different this month. We always seem to get a trend happening for the first 3 weeks of the month, and then it all seems to reverse in the last week, just when all the models start coming out, and just mixes up the picture a bit. But yeah, I don't know. Next month is going to be a biggie, because it'll be Q2
Yeah.
month end and half year end, which can be a bit of a spicy one as well. But something to keep an eye on, nevertheless.
That is usually a much bigger month indeed, Ryan. And Rob, you're right. There's some CPI measures in Australia as well tomorrow. I would suspect if nothing comes out too far from expectations, we should go perhaps business as usual on the Aussie and then focus on the Kiwi perhaps next night for this one.
Yeah, thanks, mate. I don't know why it wasn't on the other calendar.
The weighted mean, it's that one measure point of measurement that they bring out away from the other ones.
Yeah, the monthly numbers that they and the quarterly numbers that they produce. So thanks, Rob, for pointing that one out. As you can see there, we're expecting a pip lower, 2.3% for that one. Right, so what's been going on? Let's look at the yen. Now, first of all, warnings time. We've been up testing 144, which is pretty big area. We've messed around there plenty of times on the way up, on the way down, on the way up, on the way down. We're there again. But I would say you've got to be careful with this one. If you're playing yen, if you're trading the yen, you need to be plugged into what those Japanese yields are doing, because they really are driving the bus at the moment. So when you get a situation like that where this is just a follower, you've got to be careful of your tech levels. We did a lot of this move on all these yields rallying. Okay, so if they come down another good chunk, then we're going to see that moving up, and it's not going to give a monkeys about coloured lines on the chart. Okay, so just be a bit careful, particularly if you feel like you want to short against some of these moves, some of these big levels. You can do so, but don't hang around taking some profits, partials, halves, whatevers. Okay, because if this is just a temporary reprieve and then yield starts shooting higher again, this is going to fall down just as fast. Yes, we're moving into the US session, so we're probably going to start maybe trading what all that Trump news and whatever. So be careful of the old switch into the different sessions. But just on the Japanese front, particularly Asia, Europe, just be careful. Watch those yields when you're watching the yen. But in the meantime, if these yields continue to come down, we're probably going to see this climbing high. I wouldn't rule out, maybe another 15, 20 basis points in Japanese yields lower, and maybe we're up testing 145, something like that. But as I say, also factor in the dollar side of things. If we are just heading for a bit of a US risk on period and we see US stocks tramping higher, this is probably going to see the dollar moving higher as well. So there's potentially double tailwinds for the dollar yen moving higher. What do you make of it from here, mate? Dollar yen.
Yeah. I don't disagree. I don't have any cash in the yen pairs. I'm still long a sterling yen call expiring this Friday. What do I mean, it's a tough one because US yields haven't budged, so the other yields are moving around, which are going to drive the currencies seemingly for this week mostly. So yes, I would not rule out some more temporary, if anything, weakness in the yen, and then we will see what the equity markets are going to do, because we had two drivers, right, over the month of May. You've got the interest rates, nervosity on the bond market. That was a result of very unpredictable trade as well. And then for this week as well, I guess we will have to look at what all those equity markets are doing, because they are in a serious lift if you look at the European ones this morning as well. So those will be probably our two main drivers for what this market is going to give us this week. But for the yen, I wouldn't rule out a bit more weakness, mate, on the back of those bonds coming back in Japan.
Yeah, thanks, mate. Nuno, if you're looking for the tickers for Japanese yields and you're on trading view, then most of them you just need the country code and then the duration. So, for example, JP and then 0. If you want the short end, you have to do 0.2. You can't do JP 2 year. You have to do 0.2 and then 20 year, and then pick the one that has the yield function with it. So as you can see, that's how it works for most of these codes if you're looking at trading view and so on. So that's for everyone else. And might as well point you out to this. If you haven't got trading view, we do have an affiliate deal going on here, which if you haven't been a customer before, you can get free access to the Forex Analytics platform if you join TradingView with an annual subscription. You can wait till they have one of their great sales dates. It has to be an annual subscription, so you can check that out on our free offers page, which you can get all the deals and whatnot that we've got going on. So yeah, if you haven't got a TradingView account and want one, you have to be a new customer, then check that out as well. So yeah, as back to the yen. As I say, yeah, I wouldn't rule out if yields keep coming down in Japan, we see a move up to 145, and then we have to see what happens up there. We couldn't quite get down to this 142 area that I was waiting for, but got close enough. What do we get to? 13, 15, close enough for government work, as the Yanks like to say, but not a real test of that zone just yet. But anyway, a good strong bounce after that. Euro dollar, and yeah, we've come off a bit. Everything looked like it was going fine for the euro on all that news and coming out, bit of relief there, but that switched a bit to dollar positivity, hence why we're seeing that coming down as well. So we got up to this 114s area again, just coming short of a level up here, 114.20s, but we did just tick into that resistance just below it, 17s, 18s, and then we've now just failed at 114 and heading down. We're still maintaining this uptrend, okay, of the last couple of weeks, so that's still in play. I might stick a fib on that, I don't know just now, but anyway, you can still trade off these old levels, fib levels, which have been showing up support and resistance anyway. So the old 50 down here at 113.20 is something to keep an eye on that, but as I say, still maintaining this uptrend, so we're not ready to turn that around just yet. Cable holding up a bit better. It's had a bit of a breakout into the 135s. Now we're looking at some of the bigger levels up above. Let's give it that old thing there. That's, well, just helping euro sterling to a new low now. We had a move, solid move under this 84 handle now. It's we had a go last week, but it bounced back up. But this is real textbook that we're potentially heading for a leg lower. And now we're just nicking a new low. We got a bit of traffic. Let's just come out a bit. Got a bit of traffic all in here, this 60s, 70s area, and then down to 83, 40s. But if we get below this, call it 80, then, and we can hold it, then we could be heading much lower, maybe down to the low 83s, even a bit more potentially. So keep an eye on that one as well. But as we've been saying, all dollar pairs pretty much moving the same way. Aussie dollar, if it's going to hold up this move above 84.40s, that's where it's got to do it. So it needs to hold in here. We've got a bit of confluence coming in of the moving averages on the H4 as well. So if can we hold this level K for once? We've tried it, kept failing. Is this the one that's going to springboard us up? We did make a new high, which is encouraging, but then the rug's been pulled again.
Yeah, the thing is, we've hit, as I shown in the in our chat room, in our community this morning, for the people who want to come and join us. We are not showing everything, obviously, on the shows, on the free shows. We have hit some very interesting levels on quite a few dollar pairs, and we can basically look at nearly all, I say, majors and secondary ones. We've hit them all, and they're not 100% decisive levels, but very interesting levels on most of the pairs. And now we're coming back, obviously helped with those bond moves that we spoke about. but it is quite interesting going into the last week of the month that we hit those levels. Albeit obviously over a day where the US and the UK were closed. So we had a bit less liquidity to get up there or down there in the dollar on the dollar side of things. But they are all pretty interesting levels, whether you go from the euro over the cable, Kiwi, Aussie, dollar CAD even. Yeah, we hit pretty interesting levels, and from there the dollar bounces a bit. So that is something that we should pay attention to, I say.
Yeah, cheers, mate. One more, and then I'll bounce it over to you, mate.
Sure.
This is one that I fancied a little nibble last night. We were down testing this 82 level, which has been pretty strong. I did have half a thought, it's probably not right, but when I saw Euro Swiss bouncing and Euro dollar coming down, I wondered if maybe the S&B were doing a bit of smoothing, but the size of this move maybe not has got the SMB's fingerprints on it, but a solid hold down here at 92s thus far. I'd be very wary, even though I'm long, if we get a quick move back down here, maybe during the US session, because if we return back here, it suggests that this trend isn't quite done yet. But again, got a bit of moving average action going on here. The 200 H4 coming in about around this 82.60s area, which has been a bit of a pivot level most recently. So it needs to get back above that, and then maybe it's got a chance of taking on the 83 handle for that one and turning around this minor trend here. So yeah, but a little nibble in that one. Okay, right, I'm going to bounce it over to you, mate.
Could be enough, on that dollar Swiss. Could
Yeah,
be,
yeah. Sometimes
could be that
timing.
they, yeah. And as you say, where the euro is not really advancing much, on the rest of the pairs, we do see a rebound in the euro Swiss, and could be, man, could be that they are there. I'm not going to rule it out at all, especially looking at the level from where we bounced, exactly as you were showing on your chart over there. Yeah, I mean, euro sterling, Ali, it's still going. It's still, we had this blip, and I said, oh, okay, maybe sterling not really the big flavor of the day anymore, but we stopped right where we had to stop, and from there euro sterling is coming down again. And whoops, sorry about that, didn't mean to grab it. Yeah, we are going to come into this traffic zone here, if it continues. So I do think we can go and see low 83s again, but there, be perhaps start to be a bit cautious, because we've seen quite a bit of traffic zone. Is euro sterling, is it logic that it goes lower? I think so, in a way that the euro is still growth-wise, etc., not out of the woods. They're still in those negotiations with the US, where the UK seems to be doing a bit better, even though nothing is really changing too much in UK's favor, but they have a door open with the EU again. So I think there's quite a few things. If you take it the international side of the sterling, which is still making it, in my opinion, more attractive than the euro. So yeah, I think we could see a bit of a move lower. I'd say watch out if we start to break back above 84. Well, you start with 84, 10, 15, figure 10 or so, and then if we get back above 84.30, I think it's not going to be reasonable anymore to expect too much downside. But so far, just a correction, and we started to go lower again. So that is pretty cool. I'm just going to show this because I told you about this big support zone on the dollar CAD, right? All the way from 138 down to 137.10. Okay, we overshot just a little. And if you go onto the 4 hour, we overshot just a little there. We had a look into the 136s, but bounced straight away. Okay, so I would still view this zone here in the dollar CAD back down to 137, perhaps to be a solid support zone. We need a close below, and we really need a close below 137, call it figure 20 or so. And then we can say that we are probably on our next leg lower to 134. But this bounce, and as I said, we've seen it in other currencies, in other pairs as well. This bound may be looking all right right now, and this may be just a little fakey below on an empty day, and we are starting to go up again. I'm seeing the same thing as I said in the euro, seeing the same thing on the cable. I've got slightly different look here, but this top line we just tagged it or just short of the 136, and we came back down is the same in a lot of pairs, you know. Aussie, we also had a bit of a channel build up here. What did we do? Tack the high here at 65.35, 40, and we are coming back down. And all of that happened over the course of that day. And now we tried again overnight, but couldn't really hold those highs. Look at what the Kiwi has done. Low here, high here, high, tagged it, bang down again. It just shows us that the dollar hasn't completely, or is perhaps not yet ready to completely fall out of bed. Um, and we have to bear these moves and the rejections in mind because they could be significant over the course of the week. Since it's a bit of a shortened week for us, look where we end up at the end of the week. Perhaps, of course, in between we can go and the dollar can weaken again, obviously. But just to take this example of the Kiwi, because tomorrow we have RBNZ. The surprise move would be that the RBNZ, in my opinion, would not be as dovish as the market would like to see them, and then we can go and try and break this. But if we get like a non-event kind of meeting, just watch out what all the dollars are doing, because this is not. Um, I find it quite interesting. All those dollar pairs having hit those levels and now being in some kind of correction mode. The yen obviously has an impact, but I also
We lost you, mate.
know. Am I back or am I
Yeah,
back?
you're back. Yeah.
I did try to remedy to it over the weekend, but then I don't know why it's still doing it. Okay, I'll have a look at it closer. Um, so we need to pay attention to what the dollar is doing over the course of, or at least the start of the weekend, perhaps tomorrow, especially for the value date end of month. Downside, intermediate levels, but 58.95 figure is again going to be the one where I think we need to pay attention to in the Kiwi. We've seen this crossroad, this pivot around 59 and a good number of times now, and it is again going to be the key, I think, to whether the Kiwi keeps the bullish move going and eventually break above this 60, 30, 40, or the party is over and we are going to correct a bit lower. So that for those things. Gold again as well. I said be careful around for those levels here. I was long. I did cover mine, and as I told you, this level here should be respected. So for the time being, I am waiting to see what's going on with gold. I'm not in a hurry here because I don't know what the month-end flows, etc., will bring. So I'm really not in a hurry. But we can see that we are here in a triangle now. So it is a bit far away from where we are now, but don't rule anything out in those currencies, especially if we have good news on on tariffs, etc. We could see this move get down. Now, if we already hold 32.75.80, then of course it's still going to look very bullish. Silver, pretty wait and see. Yes, we are still above this trend line, but we are failing to make much headway through this 33.65.70. So wait for it. Wait for it to break. If you want to add also to longs, I would say. Yeah, you're like your sterling Kiwi, right, Frederick? But Frederick, you are in our room as well, right? I mean, there is you can always ask the question to our roomies, because I'm sure that there are a good few people trading these crosses, etc. Okay, it is doing pretty well because of the sterling, and you know what, the sterling Kiwi. Do you really want to have anything sizable in it when the RBNZ is right in front of us? I'm not sure, but if tomorrow also we end up above this 227 three quarters, it's probably going to continue to pull higher. But I'd say wait for the reaction. It is bid, it's bid, and it looks like it wants to go. But wait for the reaction post RBNZ. Perhaps not as dovish as expected. RBNZ can bring it back down to levels rather in the 226s or even 225s before again thinking what we should be doing with those. And don't forget that rejection that we had in the Kiwi, right? That just above 60 there again. That's been pretty um, significant or telling perhaps ahead of the RBNZ. So if I were you, I would wait that the RBNZ is over to get into sterling Kiwi again. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good start to our week anyway. Get you up and running, know what's going on, so we'll call it a day there. Thank you as always for coming to the Flow Show, supporting us here. Excuse me, choking. We will see you later on Face. Otherwise, we'll catch you here tomorrow on the Flow Show. Have a great day, everybody.